JB here. Hope everyone's doing outstanding. Tuesday, May 13th, pretty much 9 a.m. here on this fine Tuesday. Talk really quick about the market. Some names I'm looking at go from the S&P futures. Slightly in the green here. We just had the CPI data for April, cooler than expectations. Oh my gosh. Uh, so more signs that the inflation that has been the worry for a lot of folks, especially the bears, hasn't really materialized. But now you see the headlines and it's like, what do they say? Heads the Bears win, tails the Bulls lose, right? I mean, that's kind of like some of the folks who have created this whole with the market tumbling over the last, pretty much this year. It's like they just can't they're not open to the fact that maybe things aren't going to be as bad as that you read everywhere, right? So uh, you take a look at the inflation number, and then you read the headlines. It says, "Oh, inflation cools." In the midst of what's going to be inflation heating up as tariffs kick in or whatever, so they just can't get that out of their head. So I mean, it probably is going to ratchet up a little bit, right? But it's like they put it in a bearish spin. So funny stuff. Goldman Sachs this morning upgrading China markets, right? Their GDP. And then this is the Goldman Sachs who on Friday said, oh, stocks are on the risk of a drop of nearly 20%. Here are the triggers as Market Watch. Yesterday, Goldman Sachs still cautions over U.S. tariff rates higher than expectations, right? Just this spin. So who knows where the market goes from here? I think this week is going to be like a 580 to 590 on a SPY chop, especially with the CPI data out of the way. We have earnings. Walmart's going to be a big one here on Thursday and how they spin things. But, I'm like cautiously optimistic. You look to yesterday, the NASDAQ is technically back in a bull market. The S&P is almost closed flat for the year. So pretty good stuff. And then you start looking at the tariff situation. And yeah, tariffs have been raised, but it's like a 10% baseline on the UK, right? And then you think what's going to happen. And everybody always talks about the consumer paying more money, but maybe it's the person who needs the imports, right? The the factory or whatever. And then the exporter might take some of the tariffs. So they say, hey, I'll take 5%. And the person who's imported takes 5%, and then the consumer doesn't pay any extra, right? So maybe it hits the margins of companies. I mean, just everybody looks at the worst case possible scenario and then just spin it so bearish. It's like it makes me. It's like today I just make a joke on FinTwit because it's like, oh, look at the beautiful inflation. I mean that's all I can do. It's like, yeah, I mean, I try and keep an open mind on everything. That's what I try to do. So, uh, any solace with yesterday missing some of these moves in RH and W is that I wasn't loaded to the gills in puts, because if you read everything, that's what you would be doing, right? You think, oh my gosh, financial Armageddon's coming. We're gonna have this insane amount of inflation coming, unemployment, recession, and if you don't try not to keep an open mind, you get sucked into that, and then you're going to get destroyed. Not only are you going to get destroyed, you're going to watch some of these moves and miss them, right? So that's kind of my rant here. So that's kind of the thought here with the CPI data out of the way. Markets, I mean, yesterday I thought 580 on the SPY needed to hold. We got under that for a little bit as the press conference was coming out, or in regards to the drug pricing, executive order and things like that. And then markets found some footing. So outside of that, also, yeah, with yesterday's trade deal, it wasn't like, okay, good, we have an agreement between the world's two biggest economies. No, it's like who wins and loses, right? I mean, that's it, and it's not the U.S. that wins, because the people who are writing the articles don't want to see the U.S. win right now. Just what it feels like. Oh, China won. Like, I don't even care if China won. I don't. It's unmanageable for 145% tariffs on China and the other way for U.S. goods, right? It's just doesn't work. So there need to be a pause. There need to be agreement. I think it work. You need a deal. I don't care who wins, as long as as long as it's good for the global economy. And if it's good for the global economy, it's going to be good for U.S. consumers. So, all right, rants for other days. So that's kind of what I'm looking here on the market between 580 and 590. Maybe some chops, some consolidation, and then who knows? I mean, maybe we start working into the mid 590s and higher in the coming weeks, pending any crazy shenanigans, right? The thing is too, like I just so I'm a little passionate this morning because it's just I read stuff. It's just like exhausting. I mean, on the flip side, it was exhausting with these headlines too. But I always say, I always try and have a glass half full kind of mentality with things, and it's kind of helped to keep the bears out of my head. But you look and it's like, oh, even if tariff causes some inflation over the coming months, that might be good, because right now the Fed is probably They see the data this morning. The Fed's probably saying, "Oh, we might not cut rates this year." But you know what? Now that at least they have that in the back pocket, that if inflation does start to go in the wrong direction, now they can start cutting rates. So I think it's. I'm not saying it's a win-win scenario here, but it's not like the Fed has no options right now, and we're the Fed rates at 0%. It's just not the case, right? They've cut rates only 1%, and it's still 4.5%, 4.25 to 4.5. So there's plenty of room for them to manage this. All right, that's my rant there. So that's the overall markets. Also, the amount of stocks trading over their 50-day moving average soared. Over 70% of the stocks on the S&P over their 50-day moving average. Just the trend is your friend. Good sign there as well. All right, so that's kind of overall markets. Now individual names. I forgot to talk about Trip at the open yesterday. I mean, in the afternoon rant. Open over 16. I used the move to close some more. My calls out for over 200%. I just hold a few more. It's over its 200-day moving average. I think it comes up and tests 1850. Unfortunately, it melted for the rest of the day yesterday. Um, uh, I don't know what's going on here. I just got a little message. All right, so uh, I'll just hold the rest. I was looking to get some more strikes. I'll just hold the rest for now. So that's Trip. Uh, the one that got away. I made a list on the watch list this morning of the ones that got away in First Solar. I mean, it was Friday afternoon. I was looking for a lotto and it was like 139. And I'm like, oh, maybe some 145s. They were like 25 cents. And I passed and it kept going. And then I almost pulled the trigger and thankfully I didn't because once it hit 143, it reversed. But I was also looking for calls for this week and they were like near a dollar. And I'm like, this thing's at 140. 5 days expiration. To me, the play wasn't about the China U.S. deal over the weekend with First Solar because the issue with First Solar is that the wafers and solar wafers from Southeast Asia and China are what causes the issue with First Solar. It's the competitive concerns. Their costs are so much less that it makes it very tough for First Solar to succeed. So the fact that they were going to slap on these additional tariffs, I thought was good for First Solar. So I thought it was a play that First Solar would do regardless of what happens with the tariff situation. So I didn't think, even if there was agreement, I didn't think it was going to be uber bullish. And then sure enough, it continues to rally yesterday. And then the tax bill came out at like 2 o'clock and the stock tanked. It went from 155, whatever, down to 145 in a matter of a couple minutes, $10. So the only good thing there is if I was holding the First Solar calls yesterday afternoon, I would have sold them. And then I would have missed it. It's at 170 here this morning. So another one that got away. I mean, I wouldn't even say it got away. I'm just trying to rationalize it. But First Solar has a history of moves, right? And then when I say moves up or down, and typically when it starts, it's a boulder rolling downhill or snowball. Once it gets going, it continues to go. I could see it go up near 180. So if I find any decent strikes, I might look for some lottos there. Ended the Roku calls yesterday. Some of it is I'm still riding the freebies I had from earnings. Those expire on Friday. I still think there's a possibility of a buyout, so I don't want to be not holding a position into the weekend. And I was looking for some inexpensive risk reward setup, especially if it breaks over a 200-day moving average, 72.53. So add those strikes. It was over 70 here in the pre-market. Hopefully it gets into over that 200-day moving average. It does. I'll look to lock some of my strikes out to cover costs. Walmart reports earnings Thursday morning. I think it's going to be a phenomenal report considering going into their investor day, there was a lot of concern around the tariffs. Now that somewhat has been alleviated, you look the gap fill back in February was 102. Hopefully, it can get there before Wednesday close. If not, I'll probably hold the calls as a spec trade into earnings tomorrow because I just think it's set up for a move back to all-time highs over 105. Added those spec calls on Biogen yesterday. I mean, I've been watching Biogen off and on for the last couple of weeks. That the drug price executive order seems to be kind of vague and probably less worrisome for some of these pharma names. So you saw some of the names rallying yesterday. I think continuation is a name under the radar. 125 is the levels it hit back at the end of April. If it breaks 125, it thinks it's off to the races. And then other names, I was talking about VKTX and GPCR. I mean, I've been talking about for a while, but if I do add some strikes, they have data coming out. It could be at the end of July, it could be start of August. So I don't want to be in a spot where if I add some July strikes, I miss the data. So when I add some calls, probably gonna be the August strikes, probably gonna be high ones in the 50s and beyond, just because that data is gonna be a binary event. And then other names, Wayfair you know, if 4250 or so is the 200-day moving average, so could trade up near there. So I might look for some spec lottos on there. And same with RH. I can see RH trading up near 250. So don't have it on my main ticket here in the pre-market. That's 228. So if the premiums start to come down, I'll look to add some of those strikes. I think that's it, folks. Sorry for the rant there. I'm out of breath. Let's have a great day. If things get crazy, I'll be back on audio later. Rock and roll.